Canada is in the middle of an affordable housing crisis, but the condo market is struggling. Sales are down 30% in Toronto and 20% in Vancouver. Here are 3 reasons why. Number 1, soaring supply. Real estate agents say properties used to sell in days. Now they take weeks or even months.
We've got 7 months of inventory, which is insane. And we just don't have the buyers to absorb it. We haven't seen that much inventory in 20 years.
Nearly 30,000 units were completed last year in the Greater Toronto Area alone, and there are even more on the way in 2025. But the demand for those condos that existed when construction started is declining. That's reason number 2, disappearing demand. Investors are turning away. They were the big buyers of condos for years, selling the units at a profit or renting them out. Now immigration has been capped, so rents are falling.
Rather than expectations of price increases, they have to look at things like cash flow. And at these prices, it just doesn't make sense.
And those first-time home buyers who have been desperately waiting for an opportunity to get into the market, they say the units that are available leave a lot to be desired. Toronto condos are described as shoe boxes.
Let me lie down here, comfortable. I can put down my mattress, but if I were you, I would be buying a futon, not a mattress.
With an average size of just 650 square feet. Number 3, price pressures. Even with prices starting to come down, condos in big cities aren't cheap. In Toronto, the average condo costs $678,000. That's a lot to spend at a time when the economy is shaky, forcing a lot of potential home buyers to put big purchases on hold.
Toronto, rent in Canada has reached a new low, and here are the rental costs across the country right now. Here's all the info from this online article. If you live in a big city like Toronto, well, you're in luck. Average rent prices in Canada are dramatically decreasing. And according to this report from rentals.ca, the average asking price for rent for all residential properties in Canada fell to $2,100, marking a 4.4% decline and hitting an 18-month low. And here's the average rent for 1-bedroom apartments across Canada.
We come to you with terrible news. The price of condos is skyrocketing down. Oh my god, amazing. This is terrible news for the housing crisis. Isn't this good news? Do we want everything to get cheaper and lose the investments? Don't you understand that we're going to lose the investments? When housing gets cheaper, we lose the investment. So I'm confused. What is the crisis? Well, there's not enough housing and it's too expensive. So we want it to be less expensive and more housing. Yes, but less expensive and more housing in a way that doesn't make the price go down or the number of houses increase. That's genius. I know.
Wait. Did we actually just enter a Canadian housing market where prices are falling and no one is buying? I mean, where was this energy back when we were all being outbid by $200,000? Today, I'm reacting to some shocking updates from the Canadian housing market that have economists raising their eyebrows and landlords clutching their rent checks. You are going to want to see this.
Newly renovated homes like this used to sell fast, but this listing has been on the market for more than a month now.
It does surprise me. I thought we were, going to have an offer by now, but it is just the way the market is.
This real estate agent says she's been seeing this trend since the beginning of the year.
Some listings are dropping $100,000. Some are like higher priced properties are dropping by $200,000. Some listings I'm seeing them sitting on the market for like 3, 4, or 5 months or longer, and some of them are not getting any showings.
In June, Metro Vancouver saw a 24% spike in the amount of listings on the market compared to the same month last year, but home sales dipped nearly 10%. And it's the same story in Toronto, with listings up 31%, but home sales down around 2.5%. Calgary saw an 83% increase in listings, but sales dropped 16.5%. Some experts say the drop in demand is partially due to the uncertainty brought on by the trade war with the U.S. and fears of a recession here in Canada.
People are worried about the economy. When they're worried about their job, they're not rushing out to buy a home.
Interest rates are another factor contributing to the slowdown.
I think we need to remember that we're looking at very high interest rates still. So sure, they've come down a little bit. And those are still twice as high as what we had a couple of years ago.
For buyers looking for the possibility of another interest rate hike, the central bank will make its next announcement at the end of the month.
Muskoka, Ontario's cottage country. Some cottage owners who bought during the pandemic are now struggling to unload those properties.
A new report from rentals.ca shows that asking rents across Canada are on the decline, marking the 5th straight month of falling prices. In February, the national average dropped to $2,088 per month, the lowest since mid-2023. Cities like Toronto, Vancouver, and Calgary saw notable year-over-year decreases, with Ottawa rents down 4.3% annually to around $1,900 per month. This shift is largely driven by a surge in rental supply from new apartment completions, giving renters more choice and softening demand. As a result, properties are sitting on the market longer, forcing landlords to lower prices to fill vacancies. While this is a welcome break for tenants struggling with affordability, it's creating pressure on landlords who may now be earning less rental income. If this trend continues, renters could benefit throughout the year, but experts caution it may not last forever. If construction slows and immigration stays high, the market could tighten again in the future. For now, though, the rental market is tilting in favor of the tenant.
Okay, hold up. Toronto, Vancouver, Calgary, even Ottawa, we are seeing rental prices drop and listings sitting longer than a teenager on TikTok during exams.
This Carousel Apartment building sits largely empty 1 year after completion. It's a nice looking building, nice interiors, and the fantastic Arbutus Greenway is right out the front door of your building. The problem? Pricing. That doesn't exist anymore. 31 of the 46 residential units pre-sold at an average of $2,100 a square foot, but only 22 of them closed. There's 11 commercial retail units, but as far as I can see, only one of them looks occupied. The project is now under receivership, and the developer, Matchpoint, owes about $80 million to its lenders, with interest accruing at $16,000 a day. The unsold units will likely go through a court-ordered sales process. For years, court-ordered sales never meant you were getting a good deal in Vancouver. That might be changing.
Guys, we are literally watching a market that has been untouchable for a couple of years start to cool. Houses that would have sold in a bidding war frenzy 2 years ago are now begging for offers. And here is something a lot of people are pointing to: immigration, or the lack of it. The latest data shows that immigration significantly dropped in the first quarter of the year compared to the same time last year.
Everyone's talking about how we're in a buyer's market in Canadian real estate, but what if we're actually in a tenant's market? Rents in many Canadian cities are cheaper today than they were a year ago. We're seeing an increase in distressed landlords listing properties for both rent and for sale. Tenants also benefit from prices continuing to fall, even though they absorb the sunk cost of renting. If prices continue to fall, they can buy a house at a cheaper rate in the future. And the majority of Canadians do want to be homeowners still. And CMHC has now observed what economists have been mentioning for a long time, that population growth and rents are correlated. But in this context, policymakers are beginning to take credit for it on the downside by saying that our reduction in population growth pushed rents down, but they were denying it on the way up when they said that population growth wasn't pushing rents up.
That's fewer people arriving, fewer renters, and definitely fewer buyers fighting over listings. You remove that demand and boom, the market softens. I saw a listing in Mississauga, Ontario recently that has been sitting for 5 months. 5. Do you know what that means? It means the FOMO is fading. The market is correcting itself.
Toronto homeowners are struggling to sell their homes as nearly 20,000 sit on the market. According to the Toronto Regional Real Estate Board, there were 7.9% fewer homes sold over the course of last month than the same time last year. And that's even with an astounding 70.2% more active listings, a total of 17,757.
Honestly, we saw this coming. Interest rates went up, people got priced out, and now the bubble is whispering sweet nothings to gravity. Now, this is wild. For years, renters were told if you can't buy, just rent. And now, even landlords are sweating. Some are dropping prices just to get tenants in. It's giving, I was greedy, and now I need you more than you need me. Landlords that raised their rent 40% in 2021 are now putting incentives in their listings.
We're starting to see landlords offer 3 months of free rent and other gifts to try to get tenants in the door to rent their units. And again, as we've discussed, rents have been going down in the GTA and in Toronto, meaning there's a surplus of units and not enough renters. That, and also combined with maybe rents just got too high and are now coming down. But I don't think I've ever seen something like this. 3 months of free rent, like that is almost nuts. That's how you can tell that landlords are desperately trying to get their units filled.
So what does this all mean? If you are a buyer, this could be your window, but don't rush. Experts are saying that this isn't a crash, but a slow simmer. Sellers, you might need to face the music and adjust your expectations or your price.
Unless you are forced to sell, do not list your property for sale in today's market. If you can wait. Sellers are struggling to sell their properties in the Toronto GTA area, and their homes are sitting on the market for over 30 days. It is the best time to buy. There are tons of properties. There's lots of inventory. This is the best time to search and put in your offers. I am both a buyer's agent and a seller's agent, so I see it from both sides. It's not the best time for sellers. It's unfortunate. There's tons of inventory on the market, and that gives lots of options for the buyers, and that allows them to negotiate, to put in their conditions, especially that inspection condition that I highly recommend regardless. For those who have their homes for sale and they're getting a little frustrated, do not blame your realtor. It's not their fault. It's the market. It's just how it is today, unfortunately. You might have to lower the price a little bit. You might have to compromise on a few things to get it sold. The only way to truly get your property sold is to lower the price. You have to make it more attractive to the buyer. If there's anything that needs to be done to the home, do it.
Here's the big question. Will Canada's housing market crash in 2025? In my opinion, not likely. And here's why. Despite high rates and economic noise, experts agree no crash is coming. Why? Canada is short over 3.5 million homes. That kind of supply gap keeps prices from falling fast, even if demand cools. Prices may not skyrocket, but most forecasts show 1 to 5% growth depending on the region. Markets like Calgary and Halifax are showing resilience, and interest rate cuts are expected mid-year, making things more affordable. A crash would need job losses in the masses, foreclosures, or major economic shocks, but none of that's happening right now. Mortgage defaults are still incredibly low and employment is still stable. As for the new Liberal government, it's early, but promises to streamline housing approvals, boost construction, and address immigration balance are market positives. Tariffs, they're squeezing some materials, but they may spur more domestic building, which helps the long run. Bottom line, 2025 won't be a free ride, but it's also not a collapse. The market is stabilizing, not crashing. If you're waiting for a massive drop, you might be waiting forever.
Honestly, I think Canada needed this. For too long, the housing market was a playground for investors and speculators. But now, it's starting to feel a bit more normal, balanced. But hey, what do you think? Are you seeing prices drop in your city? Are landlords in your area starting to get humble? Drop your thoughts in the comments and send me some clips you want me to react to next. If you enjoyed this breakdown, hit that like button, subscribe, and share this with someone still waiting for price crash. And I'll be reacting to more market madness soon. So stay tuned. YouTube thinks you like this video over here. Thank you so much for watching. See you in the next one. Au revoir.